Okay, good morning. Time now 7 minutes past 8 a.m. On the July 12th, 2023. Welcome to another edition of the World Bank Tokyo online morning seminar. My name is Koichi Omori. I am Senior External Affairs Officer of the World Bank based in Tokyo. I'm so sorry for keeping you wait. We had some technical issues between Tokyo and Washington, but we are ready to start now. So at our morning seminar programs, we feature the latest edition of the various report put together by the World Bank, presented by the authors, actually, the World Bank economists and specialists. This morning, we are featuring the latest edition of the Migration and Development Brief. We somehow missed the last edition for some reasons, but we are trying to feature this series actually periodically once a report comes out. And also related to this topic, last week in Tokyo, we had a pleasure of featuring World Development Report 2023 by having Tuan Du, one of the co-directors, visiting Tokyo. So it's an interesting series of 2 weeks featuring the issues related to the migrations in our program. Connecting from Washington, we have Dilip Lasta, who is the lead economist and the head of Nomad, which is a global knowledge partnership on migration and development. Dilip apparently is one of the frequent speakers in our programs, but we are so happy to have him back again in our program. Dilip, good evening, good morning. Can you hear me?
Thank you. This is the number 38 brief, migration and development brief that I would be presenting today. We released this last month, and some data have been updated, but the messages are drawn for this presentation from the brief number 38. The title is Remittances Remain Resilient but Are Slowing. And also I'll draw on the 2019 board paper on migration, World Bank board paper on migration. That would make the story a little more comprehensive and more easy to put into context. So I would draw on these two reports, and both are available on the Nomad website and the World Bank's migration website. Before I begin, I usually like to clarify the typology of global migration, because there tends to be a lot of confusion about different dimensions of migration. So we have one dimension, which is internal migration versus international or cross-border migration. And then the other dimension is economic or voluntary migration versus forced migration. And these two dimensions often get confused. For example, when we hear from the Global Compact on refugees, often they are relating to forced migration, both internally displaced people, as well as international, that is refugees and asylum seekers. And the total number that is often cited is 104, 105 million, which is 63 million forced forced migrants or internally displaced people who have been displaced because of fragility, conflict, and violence, and then around 41 million refugees and asylum seekers. So that's the total. But then the total forced migrants also would include disaster-driven internally displaced people, those who have been displaced because of an earthquake or because of floods or cyclones. And that number is not often available. So there are data problems. There is another dimension in forced migration which overlaps into economic migration category, and that is climate migrants or those who have been displaced or will be migrating in the future because of climatic factors. For example, either floods or earthquakes or cyclones, so the natural disasters, but also slow onset climate change. For example, rising water level or salinity or falling water levels as well, and desertification. So that phenomena of climate-driven migration, or in short, climate migration, climate migrants, the number of climate migrants, that phenomenon is expected to rise significantly in the coming decades. And those numbers are going to probably overwhelm all the migration data we know of. So international migrants today are about 285 million or so, out of which, or maybe 291 million. So 250 million are international economic migrants, 41 million are refugees and asylum seekers, and then climate migrants are additional to that. And this is something I wanted to keep in mind when we think about implications currently for migration policies and remittance policies. I cannot imagine a scenario where migration stocks, the number of international migrants and refugees will decline in the world in the coming decades. And it is not only climate change, but also the continuation of income differences between low income countries, middle income countries, and high income countries that will continue to propel migration pressures. And there is also the demographic factor which is so relevant for Japan and other economies like Korea and also Singapore, and beyond that in Europe, countries like Germany or Italy, all over the Western world. There is the demographic factor that population is aging, and on the other hand, in the African countries or South Asian countries, population is rising with rising number of working age population. So that will also propel migration. People would be looking to move to higher income countries where jobs are available because there are too many old people who are retiring and there are vacancies that are not being filled. And these workers, by migrating, can also realize very large income gains. So because of climate change, because of demographic imbalances, and because of income gaps, migration pressures in the future will continue to increase. So that is an important fact I wanted to set aside right at the outset. And also in this context, to bear in mind that south-south migration already is larger than south-north migration. Developing countries are hosts to migrants from other developing countries in larger numbers, in a larger share than the host countries in the higher income countries. And this phenomenon of south-south migration is also going to increase in the future. That has policy implications for both migration policies as well as remittances. So with that, now coming to three main messages of my presentation today, drawing on the latest Migration and Development Brief number 38. The first message is supporting safe and regular migration should be a priority, and it should also be a part of climate adaptation strategy. After the COVID-19, I'm now sort of focusing on the more near-term trends for the last 3-4 years. After the COVID-19 pandemic, which saw disruptions to migration patterns, disruptions to also remittance patterns, migration flows have rebounded, and demand for migrant workers is very strong. Let me see if I can take this out somewhere. Maybe it would be helpful. Yeah. So demand for migrant workers has resumed, and it has become even in some sense stronger than during than the pre-COVID-19 times. And border crossings also have increased significantly all over the world, but so have immigration controls and border controls that have been imposed by many countries in the north, so-called north, in the US, in Europe, for example. The processing of asylum applications has slowed significantly, and in part only in part that has to do with the Ukraine situation and the displacement out of Ukraine as well. That has overwhelmed the European and the Western asylum systems. There is also an increase in transit migration as migration pressures are there. People want to move, they are trying to move, but on the way, they are facing barriers to enter their final destination. So they are stuck in the so-called transit countries. And that is true about countries that border the United States, as well as the countries that border the European countries. So there is an increase in the number of transit migrants. And that also means that those transit migrants are receiving money from outside. So for perverse reasons, in some ways, remittances to those transit countries are increasing, but this kind of remittances related to transit migration are much more like tourism revenue than like migrant remittances. It does benefit, those kind of remittances do benefit the transit countries, the host countries that are hosting transit migrants. In the brief number 37 that we released 6 months ago, we had a special section on climate change. So I want to reiterate the message from that brief that climate change will impair livelihood and increase migration, and planning for safe and regular migration should be a part of adaptation strategies. That message should not be lost because this phenomenon is going to increase in the coming decades, coming years. Long-term issues that have come up in recent post-COVID period, there is excess demand in many sectors, in particular in the health sector, and there is a need to train more health workers. They can be trained via twinning arrangements between destination and origin countries, partnerships between the hospital systems or medical schools of destination countries and origin countries. I think that could be one way to increase the supply of health workers globally, because there is excess demand for health workers, both at the medical doctor level as well as nurses and also for care providers. There is also excess demand for lower skilled migrant workers. And we are beginning to see that in particular in the US economy in a very significant way. And there is also a change in the nature of work in the form of people doing more, what is the word, the Uber drivers or those who are doing delivery. These are highly short-term contractual workers. They come in and out of the job market quickly. So there is that excess demand for that kind of workers. And because of the lack of regular channels in many parts of the world for regular migration of this kind of workers, there has been an increase in irregular migration, and there has been also an increase in recruitment fees paid by workers to labor agents to get those jobs in the foreign countries. And there is this particular phenomenon directly relates to the Sustainable Development Goal Indicator 10.7.1, which is to reduce worker paid recruitment costs. So we out of Nomad and the World Bank are working closely with ILO to reduce worker paid remittance costs. This typically applies a lot to lower skilled workers. And this is visible in the GCC countries, in the Gulf countries, but in other parts of the world where regular channels are not available, then this phenomenon takes the form of very high fees that are paid to smugglers, people smugglers, in this part of the world. In the Americas, these people are being called the coyotes. These fees are also very high. The policy recommendation to address the high recruitment fees or high smuggling fees paid to the coyotes, the policy recommendations are similar. There has to be some ways of increasing regular channels for meeting excess demand for lower skilled workers. The final long-term issue, which is probably a persistent issue, would be very, very difficult to address it, is that integration of migrants in destination countries remains a challenge and will continue to remain a challenge, mainly because of issues relating to national identity and impacts of migrants on culture, on so-called native culture, national cultures. So this phenomenon is going to be a problem, a challenge for us to meet in the future. Now, the second message, which is dealt with very in depth in the brief 38, is that remittances to low and middle income countries continued to rise in 2023, and they are expected to reach 656 billion after a huge increase of more than 10% last year. So remittance flows to low and middle income countries are now over $650 billion per year. And at that level, they are larger than foreign direct investment and ODA. And if you exclude China, which receives a large amount of foreign direct investment, remittances to low and middle income countries, excluding China, are larger than the sum of foreign direct investment and official development assistance. In other words, remittances are very much a force for development finance or financing development, and they should be very much discussed and addressed in all debates and discussions and reports relating to financing development efforts. The top recipients of remittances globally, there hasn't been a lot of change, except that Mexico has now become the second largest recipient of remittances, taking the place from China, which is now third largest recipient. And a landmark for those who follow remittance flows, a landmark observation is that remittance flows to India alone are now $111 billion or more. This is the only time, the first time that a country has, one single country has received more than $100 billion in remittances. And in India, as in Mexico and many countries, remittances are now larger than foreign direct investment and ODA, official development aid, combined. Controlling for the size of the economy by expressing remittances as a share of GDP, it is seen again that smaller countries like Tajikistan, Tonga, Lebanon, they are highly dependent on remittances. In Tajikistan, remittances are over 50% of the GDP. So this is a huge phenomenon, a financial lifeline for poor countries and smaller countries in particular. Top recipients of remittances in East Asia and Pacific are China, Philippines, Vietnam, Indonesia. Each of them received more than $10 billion per year in remittances. But again, it is smaller countries like Tonga, Samoa, Vanuatu, these are sort of Pacific island nations where remittances are much higher as a share of GDP. In terms of resource flows to East Asia and Pacific, foreign direct investment does remain higher than remittances, but that's largely because of China. If we exclude China, I think the figure is very different. Remittances are larger than foreign direct investment in many countries in East Asia and Pacific as well. Growth of remittances in 2010 were significant. It was over 8% growth in 2020. Did I say 2010? I meant 2020. 2022. Last year, the growth of remittances to low and middle income countries last year was over 8%. And it is expected to slow this year and the next year. And that is true also about East Asia and Pacific, where growth of remittances was about 4%. It is going to slow more likely to about 3%. This observation that remittance flows will decelerate in terms of growth, the growth rate will moderate this year and the next year, is based on simply the observation that the world economy is slowing, and there is also inflation that is eroding wages of migrants in foreign countries, and also simply the fact that remittances have grown so much in the last couple of years, last 2 years, that that kind of high rate of growth is not going to be possible to sustain this year and the next. So in other words, the flow of remittances will continue to remain high. It is just that their growth rate will begin to slow down in this year and the next year. In the United States, this is an observation relating to the strength of the destination economies. The employment of foreign-born workers, and in particular Hispanic workers, the yellow and red lines there, have actually, the employment rate has increased significantly compared to that of the native-born workers in the United States. This is just to show that there is a very high demand for migrant workers in the United States. This is the largest host country for migrants in the world. And we are seeing similar phenomena in other countries as well. The implication is that not only the foreign-born workers, migrants in the United States are working more, their wages are also increasing, and that is causing remittance flows to be very strong, especially to Latin America and the Caribbean region. More recently, there has been an increase in the number of people who are trying to cross into the United States through the southern border, and the numbers are historically significantly higher. And that has caused quite a bit of backlash about hosting migrants and refugees in the United States. And these kind of phenomena are also being observed a little bit in the European countries as well. That has meant, of course, an increase in transit migration in Mexico and in Guatemala and many of those transit countries. So that phenomenon has to be addressed. A related driver of remittance flows, particularly from the GCC countries and from Russia, are higher oil prices. In the Russian economy, there is a very strong correlation between outward remittances from Russia and the oil price. And we don't have new data anymore for 2022. And after the Ukraine crisis, Ukraine invasion by Russia, Russia is not producing data on remittances anymore, so we cannot update this chart. But anecdotally, there is evidence that oil price and has large impacts on Russian economy, both in terms of demand for migrant workers from the Central Asian countries like from Tajikistan, Uzbekistan, Kyrgyzstan, and also from Georgia and Moldova and all that. So there is large demand for workers, and then there is also higher wages being paid by to those workers. So money is flowing back to those Central Asian countries. In those countries, we were wrong in our forecasts when we were expecting that because of Russian war, Russia-Ukraine crisis, conflict, remittances would decline. Instead, remittances have gone up significantly in Europe and Central Asian countries, particularly in Central Asian countries. And there is a second phenomenon there that has to do with the Russian ruble. Because money is going from Russia to Tajikistan or Kyrgyzstan in the form of ruble, when the ruble depreciates against the US dollar, then in US dollar term, the value of those remittances declines. The reverse happened last year when Russian ruble went from 75 ruble per dollar to almost 58 ruble per dollar. It strengthened significantly last year. And because of that, in dollar terms, remittance flows to Central Asian countries increased significantly. This year, already Russian ruble, last I saw was already, it was above 80. I think it was hitting close to 85 or something last week. And this depreciation of the ruble would mean that remittances in dollar terms to Central Asian countries would actually be weaker, just the valuation effect. So we have that phenomenon here. The other countries where oil prices tend to play a very important role, but through fiscal stimulus programs, fiscal policy, the oil price impacts are kind of smoothed out, are countries in the Gulf. These are Saudi Arabia in particular and the UAE, where outward remittance flows have remained kind of flat or are showing signs of declines more recently. And that decline is much more structural. And this is a structural risk in a way to countries which receive large amount of remittances from the Gulf countries. For example, the South Asian countries, Philippines, and Indonesia, they receive large amount of remittances from the Gulf countries, in particular from Saudi Arabia. And in the Gulf countries, there is a structural shift in the number of foreign workers. The number of foreign workers is actually falling. It is partly because of policy for trying to generate more jobs for their own workers, native workers. That is part of the reason. The other part is diversification of the sources of migrant workers, diversification away from South Asia and East Asia towards Africa and Central Asia. So there is quite a bit of that going on. But overall, the number of foreign workers in Saudi Arabia, for example, has fallen significantly. There is an expectation that the numbers will recover in the coming years, and that would have great implications for developing countries. So a few points about the importance of data here. We realized during COVID-19 that timely data and data with the right kind of granularity are needed on remittances, especially where remittances are 10 or 20 or 50% of GDP. So we need data on a monthly basis, higher frequency basis. We need data more granular in the form of how much is coming through mobile phones, how much is coming through banks, how much is coming through internet or money transfer companies. So we need the channel-specific data on remittances. And then there is also a worry that remittance flows are now flowing through significant portions through informal channels. We need better data on that as well. So Nomad and the World Bank formed an international working group on improving data on remittances. We are calling it RemitStart. And 45 large source countries and destination countries have joined this effort. They have joined the RemitStart working group, and IMF, Eurostat, and the World Bank are very active participants as well. And there are many thematic working groups. And there was a very productive meeting we had in Brussels in April, or was it in March? And it was very useful. Now, I don't believe Japan is a member of the Remit Start working group. I would invite Japan to join the Remit Start working group as well. That brings me to a sticky policy instrument, policy question that remains outstanding. Fees for sending money remain exorbitant, especially sending money to Africa. It costs on average, global average is 6.2% to send money, send $200 to developing countries. Sending money to sub-Saharan Africa costs 8%. And in some corridors like Turkey to Bulgaria or Tanzania to Uganda or USA to Cuba, the cost could be as high as 21%, 35%, 36%. Very, very high. Now, in East Asia and the Pacific region, also costs are very sticky. Sending money from South Africa to China costs 15%, from Thailand to Vietnam costs 12%, and in yellow, I have highlighted in this chart, the yellow bars there, yellow columns there show cost of sending money from Japan to India, for example, is 10%. Japan to China, 9%. Japan to Philippines is like 6.5%. The cost of sending money from Japan remains very high, and this is something that Japan should address in collaboration with the recipient countries for remittances. In the future, remittance source will change according to migration patterns. One issue that is becoming a little more significant after the this year in particular is this whole issue of multipolarity and the lack of interoperability, as many countries don't want to use interoperable systems that originated in foreign countries. So we are looking at a multipolar payment systems globally, with the US and Europe on one side, and China, and on another side, maybe India on the third side, and many other countries. Russia will definitely come up with its own payment system. So there is an issue with lack of interoperability that will continue to affect efficiency as well as foreign exchange markups for changing money from one currency to the other. And that directly feeds into remittance costs. And also still, to access mobile instruments or digital instruments for sending money, to access digital remittance services, people have to have a bank account of sorts. And the number of unbanked people in the world still remains very, very high, over 1.5 billion people. So that issue of banking the unbanked remains important. That brings me to the very final message of my presentation. Diasporas and diaspora resources can be leveraged for raising financing for development, especially via diaspora bonds. And this is something that has been tried by Israel since 1951. India raised $9 billion, and more recently, Nigeria also raised about $300 million in 2017. So this is not a new tool, and it can be very effective in the context of our efforts to scale up development financing. Diaspora bonds could be a potentially very useful tool for the development community for financing development. That brings me to the very final point relating to financing. I think one could raise $50 billion by mobilizing diaspora saving through diaspora bonds. One could raise $20 billion by reducing the cost of remittances, and raise another $20 billion by reducing worker paid recruitment costs, and perhaps finally another $10 billion or more by mobilizing diaspora philanthropy. That's $100 billion per year. So this is something that we should be considering remittances as a way to leverage development financing, to catalyze development financing, and to use remittances to come up with new financing tools. I did not mention future flow backed by remittances, bonds that are backed by future remittances. That also has very significant potential, I think $20–30 billion a year easily. So that also should be considered, and glad to report that remittances are now very much a part of sovereign credit rating analysis as well as debt sustainability analysis. That calls for better remittance data, because then the debt sustainability analysis and sovereign credit rating analysis will also be stronger if the data on remittances are stronger. Let me stop there, and that should leave us a few questions, time for a few questions. Thank you, Coach. Over to you.
Thank you, Dilip, for sharing the main findings of the migration and development brief number 38, which was released about a month ago. We received some questions from our viewers in advance, but I would like to encourage the viewers to send your question if you did not have opportunity to send your question in advance by using online form on the announcement page of this seminar, or you can simply post your question on the YouTube the screen chat section, or you can send the question directly to me by email, either way. But before reading the questions that we received in advance, Dilip, would you please be able to explain a little bit about what the Nomad is and how Nomad works? How do you sort of collaborate with other partners, etc. So please, about the Nomad.
Thank you. So Nomad, spelled with a K, Nomad is short for Global Knowledge Partnership on Migration and Development. We set it up in 2012 with funding from Switzerland initially, and then from Germany, Sweden, and European Commission to address the sticky questions of migration by providing evidence-based analysis and multidisciplinary analysis. So one problem with migration discussions is the lack of data and proper rigorous analysis of data to inform policymaking. The second problem is the multidisciplinary nature of migration. A migration policy question cannot be answered only by economists or only by political scientists or only by sociologists. So there was that need to bring different disciplines together, the top experts from different disciplines together, to evaluate and research, to evaluate research, to peer review research that exists, and to create new research that would be peer reviewed by multidisciplinary peer reviewers. So that's the platform that is provided by Nomad. And we have 9 thematic working groups. It spans the whole spectrum of migration and development. For example, climate migration, remittances, and diaspora matters, internal migration, integration of migrants. These are all separate thematic working groups. Each thematic working group has a chair, and then an international organization that has strength, that specializes on the specific theme. An international organization acts as a co-chair. So we have, as co-chairs of our different thematic working groups, very close collaboration with the ILO, the IOM, UNDP, OECD, UNITAR. We work with many academic institutions, and it would be wonderful to explore such collaboration also with the Japan government, as well as with institutions in Japan and in East Asia in general. We don't have enough presence in East Asia, and it would be wonderful to bring them on board to join Nomad.
Thank you. Thank you very much for your explanation. Related to the very final point that you mentioned about the presence from East Asia and Japan. And during your presentation, you talked about international working group on the data and remittances, improving data on remittance flows. and then 45 plus countries are member of it, but unfortunately we don't have Japan represented there. But in order to stimulate the potential opportunities for Japanese to coming in to that group. So who are they in terms of the 45 countries? Are they Ministry of Finance? Are they line ministries? Are they research institutes? And then how did they come up as a member of this Remi-Stat working group?
So because the focus is on remittance data, we reached out to the institutions that compile the data. So typically central banks of the countries. And we sent invitations signed by 3 directors. So it was our director from the data group in the World Bank, director from the finance and competitiveness and innovation global practice, and the director from social protection and jobs. And we sent invitations to about 189 countries' central banks and requested them to nominate people, representatives who are familiar with how remittance data are compiled, because the vision is not only to improve the data, but also to mainstream it by issuing a report that would be used by the IMF in their next balance of payments manual. So they are actually drafting the next balance of payments manual. And the last time, about 10 years ago, when they were doing the 6th balance of payments manual, we had a Luxembourg group of statisticians who recommended changing the definition of remittances and introducing 3 new definitions, which have been mainstream, and that has led to a huge improvement in the data collection. Now there is need for better data, more granular data, as I pointed out. We requested that to the central banks, governors, and the people who have been nominated, typically at a director level from the balance of payments divisions or departments of the central banks, or those who are working with statistics departments. Some of the countries have national statistics offices that work on that. Usually it is the working level people, but some of them are like more experienced. They are director level people. They are participating, and we have the largest source country is the US for remittances, right? The largest recipient country is India. So we have US, India, Germany, Italy, UK, Australia. They all came. I mean, we had 60 people in Brussels when we met. It was very useful. And many of those people are also working closely with the drafting team of the Balance of Payments Committee of the IMF. So this process will truly enrich the global community.
Thank you for your additional explanation. Hopefully, we'll have more presence in your activities from East Asia. Okay, we received several questions in advance from the viewers. Let me read those questions, asking you to respond. The first one: what are the most important actions needed to reduce the cost of remittance? Should we target commercial banks around the world and regulate them to reduce the cost of remittances, or encourage to use the mobile phones by giving them to shift to use it with some kind of incentives? Any views on this? Thank you.
Absolutely, very, very good question, and probably the most relevant question. Absolutely. The mobile phone operators are providing the cheapest remittance services simply because they combine the efficiency of a message transfer together with value transfer at the same time. And most people do have mobile phones now. So given the widespread ownership and use of mobile phones, sending money avoids delays, intermediaries in a very significant way and makes it more error-free. So mobile phone remittances are the way to go for the future, and they are going to increase over time. One difficulty, of course, is that mobile phone operators, who are typically telecommunications companies, they don't want to get into financial services. And they are very afraid of the complexity of regulations that are put by central banks. These are regulations that are more addressed, directed to commercial banks about combating money laundering, about combating terrorist financing, about combating illegal financial transactions. So money transfer operators are sometimes not able to persuade the telecom operators to work together. And at the same time, both the telecom operators as well as money transfer operators, they are not able to work with commercial banks to get bank accounts, because finally for money to move, a bank account is needed. And commercial banks have so much more business doing trade finance or investments and everything else that remittances for them are perceived as risky. So there is a need to educate everyone, the commercial bankers as well as telecom companies, that small remittances are actually not money laundering, and the idea is not to avoid the risk, but to address the risk and manage the risk. And one way to manage the risk, one way to make the risk more manageable, is to explicitly start with the premise that small remittances are not money laundering. This is directly a recommendation to the banking regulators, financial regulators of countries, that small remittances are not money laundering. And then we try to develop risk metrics for characterizing what kind of transactions tend to be risky, and help operators and banks to use a risk-based approach to identify risky transactions, rather than saying we will avoid this transaction by stopping remittance transactions altogether. So that, I think, is a three-pronged approach. So educate banks, educate telecom operators, and streamline the regulation by recognizing small remittances are not money laundering. And related to that, improve or design metrics for characterizing risky transactions.
Thank you very much for your responses. Let me read the other question that we received and then ask you to respond all together. The first one, please introduce some notable examples in terms of lending operations by the World Bank to enhance the flows of remittance. That's one. The second one, how do you analyze the relations between the ongoing food crisis in Africa and the role of remittances? So two questions. What are you doing at the World Bank, and also food crisis in Africa and remittance, please?
So on the first question on remittances, other than the work that we are doing on data and knowledge, and the Remittance working group type of institution building type of activity, there have been some small, relatively small loans and a couple of larger loans to countries like Tonga or Bangladesh to modernize their payment systems, and in that process to facilitate remittance transactions. So it's not a lot, but some beginning has been made. We also host the Global Remittances Working Group, which originally started with G7. It was called the G7 Global Remittances Working Group. Then it became G20 Global Remittances Working Group. And then we dropped the G7 and G20, and we are calling it Global Remittances Working Group. That is there since 2008, actually, just before the global financial crisis. And we meet twice a year during the spring meetings and annual meetings. So we'll be meeting again during the Marrakesh annual meetings, where we bring in important countries as well as private sector players and some civil society people to discuss important regulatory issues and pressing issues relating to facilitating remittances. That then leads me to this issue of food security challenges in Africa. We had that problem during COVID, and just before COVID, also around COVID, also coincided with those locusts. East Africa was impacted by locusts, and I recall that World Food Program put out a report in 2020, just after the lockdowns had started, saying that because of the crisis, the pandemic, and because of locusts okay, so the number of people who would face food security problems would be, I think it was 80 million or something. I don't have the exact number right now. I can't recall, but it was like 80 million plus. And then we came out with our report showing that remittances will decline because of COVID-19 crisis, the lockdowns and travel difficulties, travel bans. And they doubled that number in terms of the number of people impacted. That was directly based on the projection of remittances. So this is to show that there's a direct correlation between remittance going into the hands of poor countries and their ability to buy food and have food security. So if remittances decline, then food security problems get exacerbated. So it's truly, remittances are a lifeline to poor people in African countries and elsewhere.
Thank you very much, Dilip, responding to all the questions that we received from the viewers. I really appreciate it. This morning, we had a pleasure of having Dilip Lasa connecting us from Washington, who is the lead economist of the World Bank and the head of Nomad, sharing the latest edition of the Migration and Development Brief number 38. Thank you very much, Dilip, for your time. Really appreciate it.
Thank you.
We'll definitely get back to you in 6 months' time, asking for another round of the presentation on the next edition. Okay, later this week, we are going to have one more morning seminar. This is going to be on Friday, 9:30 a.m. In Japan Standard Time. We are going to feature the Falling Long-Term Growth Prospect Report. This was released in the end of March. And then we are going to have Aihan Kose, who is the Deputy Chief Economist of the World Bank, and also the Francisca Onezorge, who actually became the Chief Economist for South Asia regions this month, starting this month. But the two of them will present, and then we are going to have Professor Kenichi Ueda of the University of Tokyo as a commentator joining the seminar. This will start at 9:30 a.m. On the Friday this week. Please take a look at the website for the further information. For this one, actually, the registration is required, as we are going to organize this using the WebEx webinar, and we are providing the simultaneous interpretation for this particular seminar. With that, thank you very much for joining us, watching our seminar. See you on Friday this week. Thank you.